Hi guys, and welcome to today's session. In today's session, if you haven't been to one of these before, it's basically an overview as to who Darwinex Zero is, what we offer to our clients, and kind of a very basic, non-in-depth look at trading with us. Now, if I could just ask somebody in the Discord just to confirm you can see my screen, you could also hear me, that would be absolutely fantastic. Okay, Timmy FX will be able to go over your questions in this session. That's absolutely fine. What we'll do is, if you're okay to hang around for 20 minutes or so while I go through the presentation, then we can go through that afterwards. I'm presuming you can all hear me and you can all see my screen, so that's perfect. We'll jump straight in. So my name is Kieran and I'm head of UK growth and business development at Darwinex and Darwinex Zero. Now, Darwinex is our sister company or parent company, whatever you want to call it. We are attached at the hip, and Darwinex is a regulated asset manager and broker. We're regulated by 3 separate jurisdictions, by the FCA in the UK, CNMB in Spain, and FSA in the Seychelles. We currently have over $100 million invested through our investor marketplace. So this isn't capital in our platform, that's from external investors putting money into our platform. And we have 10,000 active strategies on the platform as well, spread between both Darwinex Zero and Darwinex. Now, Darwinex Zero comes into the equation for being the best place to become a professional asset manager with zero risk. Now, I'm not going to go too much into the details between Darwinex and Darwinex Zero and what makes them different, but the main difference is you trade with a virtual account, so you don't have to risk any of your own capital. We have a roadmap starting with Darwinex Zero to get you to become a professional asset manager. I note I say asset manager, not trader. Anybody who opens a brokerage account can, by definition, just become a trader. But what we're looking to do is grow the next generation of asset managers. Because we have a hedge fund where we invest capital ourselves into our traders, we genuinely want to find good traders who we can scale up through our own capital and external capital. We also help traders develop and grow and scale using advanced strategy insights. So I run weekly sessions on a Wednesday now at 4 p.m. UK time, where we go over these insights and metrics and we look at statistical ways to improve your edge as a trader. These sessions are great, and if you haven't been to one before, I highly recommend coming to one, because every week I take somebody who's in the audience, I look at their Darwin, and we take a deep dive into all of their statistics. Rob in the Discord, imagine putting asset manager on your CV though. I mean, it's a genuine role, right? An asset manager. If you're, it's better than trader, I would say. Unless you've been a trader for a professional entity in the past, then you can put head trader for XYZ. Hey, come here. And then lastly, we have a great community of like-minded traders. We are growing daily. I think our Discord it's super close to hitting 10,000 members, and it's full of like-minded traders who are all there with the long-term mindset. They're all looking to grow. They're all looking to scale. They're not just looking to be a one-hit wonder, and they want to become professional asset managers. So it's a great place to interact with other traders. Now, I mentioned the roadmap to becoming a professional asset manager, and this is how we've laid it out. So this is what we try and encourage traders to see it as. It's not just I'm going to get rich overnight. It is a long roadmap, which is going to set you up potentially or hopefully for the rest of your career. Now, we start with the calibration phase. I go into more depth about the calibration phase on the Darwin explanation sessions on a Thursday, because it's a little bit more in depth. But to give you kind of an elevator pitch as to what the calibration phase is it's just a 3-week period, there or thereabouts, can take slightly longer. But it's a roughly 3-week period where our proprietary risk engine reads your trades, understands how you act, how much exposure you have in the market, and then finds a healthy balance to change your risk to match a value at risk of 6.5%, which is in line with our standard risk across all Darwins. Like I say, it takes roughly 3 weeks, and you have to make a certain amount of trading decisions. It's not a pass or fail assessment, so there's no fear going into it. You don't have to worry about passing or making a certain amount of return or not having as much drawdown. But this is the period where we understand how you trade and the level of risk that you take. Once you come out of calibration phase, your Darwin will be created in the following Monday. and then you will be eligible for allocations moving forward. Once your Darwin is live, you're then entered into DarwinIA Silver, which is the first tier of our DarwinIA program. I'm going to go into these in a little bit more depth in a moment. And then we have DarwinIA Gold, which is our second tier of the DarwinIA program. We also have permanent allocations, which is pretty much what it says on the tin. It's an allocation that's held on your Darwin, and there's no drawdown limits. There's no time expiries. As soon as you've activated it on your account, it will stay there for life. Unless you restart your account or cancel your account, of course, your permanent allocation will leave. But it's 100,000 euros that will sit on your account forever. You can continue to earn performance fees from this as long as you're hitting new high watermark highs consistently over a long period of time. In DarwinIA Silver and Gold, you can earn monthly allocations. They drop off after 3 months in DarwinIA Silver and after 6 months in DarwinIA Gold, but they are cumulative. So each month you can still earn a fresh allocation, and it will just add onto the balance that you still have remaining from the past 3 months. The allocations range from 30 to 360,000 euros in DarwinIA Silver, and they range from 50 to 500,000 in DarwinIA Gold. To hit DarwinIA Gold, you have to hit a few different performance milestones. So firstly, your track record needs to be 8 months in length. Unless you're trained through Darwinex, then well, no, that's a lie. I'm skipping ahead. Your track record has to be 8 months in length, and you have to hit a certain performance metric. So you have to have a 20% return as a minimum, with a risk to return of 2.5x. Now, what that means is if you've got a 10% drawdown, you would need 2.5x of that drawdown in return. So you would need a 25% return. As soon as you've ticked those metrics alongside an 8-month-old track record, you'll be promoted to DarwinIA Gold. Again, then you become open to investors. That's what I meant to say. You're open to investors instantly through Darwinex.com, but through Darwinex Zero, you have to have be in DarwinIA Gold. So you'd be open to investors straight away, and you're open to the longer, larger allocations through DarwinIA. Now, the third way to earn performance fees is through our investor marketplace. So this is kind of like a prop model. So investors can look at your trading strategy, they see your Darwin, they create an investor account through Darwinex, and then they allocate capital to your trading strategy. Super, super simple. You don't have to go out and network with investors. You don't have to sell yourself or find these people who you need their capital, because it's all done through the Darwinex marketplace. Really, I always say to people, your performance is the thing that sells, your performance and consistency. So an investor doesn't care. An investor doesn't want somebody who's doing 20% return per month. They want somebody who's doing 2 to 3% each month consistently. Yes, they understand there's going to be drawdown months, of course, but they want somebody with, stable performance consistently over a long period of time. And then finally, something that's going to be released very, very soon, which is the Darwinex fund. So if I just pull this across right now, and you'll be able to see it. So this is the Darwinex fund. Why has that happened? This is the Darwinex fund. So the ticker is INDX. And this is basically what we've been talking about for a long period of time now. And it is a selection of our top performing Darwins. So right now, I think there's roughly 200 Darwins in the index. And as you can see, we did have a drawdown month through February, March, as the market took a downturn. Of course, a lot of our top performing traders also got hit by that. So there was a downturn, and we're starting to recover now. But we actively allocate large amounts of capital through this index to our traders. Now, of course, it's not split equally. So if there's 200 traders in and there's 10 million, it's not saying that everybody gets their fair share of the slice. We obviously allocate higher amounts of capital to traders with longer records who have shown better performance. But this is kind of the pinnacle. You will see Darwinex Labs as an investor into your strategy, and that would then therefore mean that the INDX has exposure to your Darwin. So I'm really, really excited for this. I'm really excited for this to go live. And I'm definitely going to keep a track of this, because I think now that the market's turning, as you can already see, the traders are starting to recover and the index is starting to go back up. So just to recap the calibration phase, you sign up, it takes approximately 3 weeks. Of course, it can take slightly longer if you are less frequent of a trader. However, we have made adjustments for this so that swing traders aren't penalized. And then once you complete the calibration phase, your Darwin is created the following Monday, and then it's open for or eligible for DarwinIA allocations and permanent allocations. To recap DarwinIA Silver and Gold, we have two different levels. DarwinIA Gold has longer allocations and they're also larger. They're both run as monthly competitions, and the allocations are in addition to your permanent allocations. So it's not a one or the other. Now, to gain allocation in DarwinIA Silver, you're given a rating. So you can see we have this leaderboard over here. You can see the Darwin tickers, their ratings, and then the amount of allocation that they're going to gain in that month. I think this has been increased now. I think the top is 360, but I'd have to double check that. What we do to calculate your rating is we take a look at your current month's return, your previous 5 months return, and your maximum drawdown over the past 6 months. And that way we're taking a look at a snapshot of 6 months worth of performance. This way it's much better because if a trader has a track record of 2 years, for example, and the first year and a half was really poor performance, and then they start to come out of that period, we don't want your old track record to be hindering you. So we do try and give more recency bias to this. So current month's return does have the highest weighting of this rating calculation. Just so that we know if a trader is performing well, we want to give those guys capital. That will give you your rating, and your rating depends on the amount of allocation that you receive. But any trader with a rating above 75 will at least get 30,000 euros in that month. DarwinIA Gold is slightly different because it works purely off your current month's return. We don't look at the other things. Whoever's got the highest return for that month has the highest allocation, and then number 2, 3, 4, 5, 6, and so on and so forth. Again, to recap permanent allocations, you activate the add-on within your dashboard. You can select a growth target or an instant option, which we'll go over in a moment. And then that 100,000 euros is allocated permanently to your Darwin. It's important to note that these are all held at Darwin level, which is risk adjusted. So you're going to be trading with 100K or $1 million signal account. Your 100K allocation does not get attributed to that. It is on your risk adjusted Darwin. So if you make 10% a signal account, but you're being scaled down by half, you'll only make 5% on your Darwin. That's where you would earn the performance fees because it's risk adjusted. Now, as I said, the permanent allocations, you can choose a growth target or you can choose an instant option. So the growth targets that we have is 5, 10, 15, and 20%. Now, what that means is that if you activate one of these options, you would therefore have to make 5, 10, 15, or 20% before the 100K is activated on your account. Similar to an online funding company where you have to make a certain percentage before you get your live account. It's very, very similar in that regards. We do, however, have the instant option, which is the 0% on the screen right now. That basically means at point of activation, the 100K is therefore live on your Darwin, and you'll be earning performance fees on that capital moving forward. Something that not a lot of people know is, like I said at the beginning of this, Darwinex is our sister company or parent company, however you want to say it. We are the same, we are different, but we are the same. All the infrastructure, the software, the team, everything is the same between both of the companies, okay? And what we allow is for a trader who's on Darwinex Zero to transition to Darwinex at any time. Now, you might be wondering why you would want to do this. And really the main reason that people do it is because they want to save on subscription fees. Well, sorry, my trading view's pinging off alerts. There's a problem being a trader. You can transition at any time to save subscription fees. So, I mean, if you didn't want to pay the 38 euros a month, that's absolutely fine. You can transition to Darwinex, where you would have to open up a live account with our FCA regulated broker and trade through there. But the reason that this is so important is because if you wanted to start trading with your live account, you do not lose all of your track record. So it's not like closing down your account and reopening a new account. What we do is we take all of the trading history and we pull it across to your new Darwin. Well, we pull it across so that you keep your Darwin essentially, but you're just connected to your new trading account. But what's really important to know with this is that regardless of whether you're trading with Darwinex or Darwinex Zero, really the paths are exactly the same. The end goal is exactly the same. You're just paying for your subscription in two different ways. You're either paying a monthly subscription or you're paying via brokerage fees, because with any broker, obviously you're paying commissions per trade, and therefore we don't charge a subscription fee for the Darwinex service as well. So it's just really how you want to pay for the service. Do you want to pay in commissions or subscriptions? But the end goal, which is investor capital and Darwinex Labs, that remains the same, and you can get there via either company. Now, one of the most underrated elements of Darwinex Zero, in my opinion, and I think it's because I'm stat heavy. I love data and analytics, but it's our trading statistics and insights section of our platform. You can view various different metrics, custom built ones and ones that are more commonly found. And more interestingly, we are looking to build out a trading journal as well. So you can actually journal your trades as you go, which I think will be huge because, and this was an internal conversation that I had a long time ago, and we're finally getting around to building it, which really excites me, is that we offer some of the most advanced metrics that you can find. We have our own custom built Monte Carlo test. We work out traders alpha cap or max investment, but we don't have somewhere where a trader can add a screenshot of a position where it shows their return on that trade, their drawdown on that trade, their maximum excursions, and you can log notes. And so what we're looking to do is actually implement that so you have it as kind of an all-in-one box, which I think is going to be super cool. But more importantly, with the trading statistics and insights, is that you can actually view Darwinex Zero Darwins on Darwinex.com. So for example, if I pull this back across right now, if we were to look at, let me think, OLRE, what you would do is go to Darwinex.com. You would need to log into your account. So you can log into your Darwinex Zero account here. You don't have to create a new account, although you can if you want. Don't know what's going on with my Google Chrome. And then once you've done that, just /Darwin in the URL, then / your 4-ticker Darwin. And then if that doesn't work, add a hashtag at the end. Don't ask me why. Technology does what it wants to do. Once you've done that, you can see it comes up with the 4-letter ticker. It also says buy zero here. And then you get access to all of the metrics on Darwinex.com. So here we have a load of different metrics. Again, I go through all of these in the strategy development sessions on a Wednesday. So if you're not sure what these mean or how you can use them, join the session. Believe me, you won't be disappointed. We also record them, so they're always on our Twitter and YouTube as well, so you can watch the previous sessions. But for example, you have capacity here. So you can take a look at a trader's capacity, i.e. how much capital they can manage. You can see this trader can manage 210 million. So there really is some fantastic statistics that you can take a look at and really dive into that you wouldn't get anywhere else. Oh my life, let's sort this out. And then finally, I mean, I feel like this is a mistake. I feel like this chart shouldn't be here, but because it's here, I'm going to go over it anyway. This is your value at risk chart. So this measures your risk exposure as a trader. Now, what we do is we standardize every trader on our platform to a value at risk or VAR of 6.5%, which you can see we've put a nice big line across the screen so that you can see where 6.5% would be. The reason we do that is because we want to match the volatility of the S&P 500. Again, if you want more information on this or you want me to go into more detail, the Thursday Darwin explanation session, we go into this in much more depth. It's a little bit more of an advanced session than this, but feel free to join that as well. Again, they're all recorded, they're all on YouTube, so you can watch them after the fact as well. You don't have to be here live. But as you can see, the arrows represent when the trader has a value at risk higher than 6.5%, what the risk engine is going to be doing is it's going to be tuning the trader's size down at Darwin level. So at the beginning of this chart, it roughly looks about 13, maybe 13.5% value at risk. Now that means that the trader is trading at pretty much double what we would expect, right? So what we want to offer their Darwin out. So what we would do is we would look at that 13%, we would go, okay, this trader has a risk multiplier of 0.5x, because what we need to do is he's trading a 10 lot, and that's giving him a value at risk of 13%. We need to get that down to a 6.5% value at risk. So we're going to halve his position size. So for every 10 lot he trades, the Darwin's going to trade a 5 lot, and we're going to manage that risk exposure. Now you can see over time, the value at risk of the trader actually comes down, and therefore the risk multiplier would increase. So as the trader gets closer to 6.5%, the risk multiplier is going to be getting closer to a 1x. When they hit 6.5%, their risk multiplier is going to be a 1-to-1. So basically, if that trader's now taking a 5 lot position, their Darwin is also going to be taking a 5 lot position. As the trader goes underneath 6.5%, the risk engine would be scaling them up. What I think as kind of a disclaimer, because this is a question I get a lot. People always ask me, do you need to risk less? Do I need to risk, 0.1%? And I always say it does not matter what percentage risk you risk per trade. That's not an accurate measure of risk. And the reason I say that is this is one of my Darwins. So I actually risk 1% per position on this account. And I'm still and have always been under 6.5% value at risk because of the way I trade. It's not just down to the risk position or the risk per trade that I take. There's so many different factors that calculate my risk exposure. I'm fairly conservative, at least on this account anyway. So my value at risk is quite low. So on my Darwin, my trade size is actually getting scaled up. So for every one that I trade, you can see down here in my Darwin live trades section, you can see my current risk ratio is 1.19. So that means for every one lot I trade, my Darwin is trading a 1.19 lot. And that will adapt over time. It is a living metric, so it will change, it will update. So as you trade and as your behavior changes, like this chart represents, the value at risk will come down and go up, and your risk multiplier will follow that. The only thing that I will say on this is don't get lost chasing a certain value at risk. Like, you don't need to get this 1-to-1. You don't need to hit 6.5%. That's the job of the risk engine. Your only job as the trader with DarwinX Zero is to take the best positions or take the best trades. That's the only thing you need to worry about. The proprietary risk engine takes care of everything else. Finally, if you are not in our Discord, I highly recommend joining. For the guys watching in Discord, I'm sure they'll back me up on it. If you need answers, it's the best place to go. If you want to talk to traders who sort of think similarly and aren't just, searching for that next $1 million opportunity and are actually committed to trading as a career or trying to grow and scale AUM, then join our Discord, come and get involved in the conversations. We have an English section, we have a Spanish section, Italian and French also, because those are our 4 biggest communities. But we're always open to, expanding that. If we have a large group of traders from a specific region, we're always happy to add more regions into that. We also have a partner program for any traders who have a large following or a presence. We would love to work with you. We would love to help you build your track record and reward you for bringing clients to DarwinX Zero. So if this is you, please get in touch. You can either DM me on Discord or you can get in touch via our website. Our email is info@darwinxzero.com. Like I say, it's available on the website, so you can get in touch. And me and you can jump on a chat and we can have a talk about how we can collaborate and what we can do together. And finally, all traders on our platform have a member get member code, which basically allows you to share your code to your friends, family, your aunts, dogs, sisters, nan. If they sign up to DarwinX Zero and pay for 2 months active subscription, you'll get a free month for bringing those clients to DarwinX. So if you wanted, a 3-year subscription, go and invite 12 friends. Once they've signed up and paid for 2 months, you'll get a free month for each of them, so totaling up to 1 year's free subscription. What could be better? And then finally, we do have a discount running at the moment, which is valid for our monthly subscriptions, yearly and 3-year subscriptions. The code is DWX10, and that will get you 10% off on your first month or your yearly or 3-year plan. And then to finish off, I know there's Timmy in the Discord said he's got quite a few questions, but I would like to hear from all of you guys. If anybody has any questions, please pop it in the Discord chat, the YouTube chat, or on Twitter, and I will take a check now. I'll see if we have show chat. No, there's nothing on there. Cool. Timmy, it would be great if you could send your questions in now, dude, and I'll be happy to go over some of your concerns or questions. Yeah, Rob, fantastic point. Just don't risk your whole account and be sensible. Like, you gain very, very little from risking a lot with DarwinX. It literally doesn't matter because your Darwin is the key and it's risk adjusted. So whether you risk a 1 lot, 5 lot, 10 lot, 100 lots on your Signal account, your Darwin will always come out the same result, because regardless of your position size, your inherent risk in that trading strategy and how you operate is still going to be the same. So your Darwin will always come out to the same result. And see, Timmy's typing, so we'll wait for him to finish. if you have multiple questions, send them in one by one so I can answer them as you're typing. Just waiting for the questions to come in, guys. Okay, here we go. So Timmy said, I just qualified this month for this month's allocation, but I discovered I had 30% plus on my Signal account, but just had 3.5% on DarwinIA. Okay, so that sounds like your value at risk is, well, at that level, probably ridiculously high. What's your Darwin? And I'll take a look. XTXG. XTXG. Okay, so let's take a look. Okay, so yeah, your value at risk is really, really high. So it's currently sat at 44.89%. Now for let me bring up my pen so I can annotate this. For reference, if it's gonna come up, there we go. For reference, the S&P 500's value at risk is down here, right? Now that's what we standardize all of our traders Darwin's. So we standardize your risk to mirror this. So 6.5% value at risk. Now you're trading at a 44.89. So divided by 600. So you're trading almost 7 times the value at risk of the S&P 500 and the standard risk that we offer at Darwin's. Now, that would mean that you're going to be tuned down. So your position size from Signal account level. So if you're taking a 10 lot at that point, I mean, you're probably going to be tuned down by 0.15, 0.2 maybe. Maybe more like 0.15, which will mean for every 10 lot that you take on your Signal account, your Darwin's going to be taking 1.5 lots. Now, the reason we do that, of course, is to manage risk for investors and to manage risk for traders too. Obviously, we don't want your account to blow up. And historically what we have seen, and it can be a little bit sore to accept, but historically, Darwinex has been around for 13 years. And so we've seen tens of thousands of traders. Anybody with a 30% plus value at risk has a very, very, very high chance of either blowing up or going through a really significant drawdown. I'm not saying that's going to happen to you, so please don't think that I'm saying you're going to blow up, but it can happen, and that's what we've seen. If I take a look at your worst negative excursion, 3.29%. Let's just say you've got an average risk multiplier of 0.15. So that would be, I don't know, let's just times it by 7 because that's what you're trading 7 times more volatile than the S&P. That would be a roughly 23% drawdown at Signal account level within a 4-month period, I believe it was. And I mean, you'll know the exact number or the exact drawdown percentage you went through at Signal account level, but I would estimate it was probably about 25%. Now, we would never be able to offer that out to an investor because it's just too high a risk. So again, we scale it down. In terms of your next question, how do I get my account back in order? Well, the great thing for you is that, if I just bin this off, the great thing for you is that you're in positive territory, right? So there's no need to restart anything. There's no need to, you've got allocation, you've got a decent rating. You're already above 75, like it's fantastic. You're in a good spot, right? What I would do if I was you is I would slowly bring my position sizing down. So your value at risk is built up of a few different a few different factors. The asset volatility. So dependent on the assets that you trade, you would have a higher value at risk. The trade frequency, I think you have a fairly high frequency. So the more you enter the market, basically the higher risk you are. And then your trade duration. Again, the longer you're in the market, generally the higher risk there is for round trips, winners to turn losers, things to go wrong, black swan events. Now, all of those pale in comparison, they're such minute factors compared to the one thing that you can actually change as a trader, which is your position sizing. So I would presume you're trading with fairly high position size, maybe not ridiculously high, because I think your trade frequency is 435 trades in daily trade frequency. Here's the one I was looking for. So you're trading almost 7 times a day. You're holding them for 8 hours on average for your winning trades, 1 day, 5 hours for your losing trades. So you're trading quite frequently. You're in the market for a long time. Let's have a look at the assets that you're trading. Gold, GJ, Euro, Pound. So your asset volatility isn't that bad. GJ and gold are higher. So we use Euro dollar as a benchmark. So all of these assets are higher in volatility than the Euro dollar. But again, this is just kind of inherent risk in the strategy. This isn't something that you should look to change. You shouldn't stop trading gold because you have a high value at risk. You shouldn't stop trading pound yen because you have a high value at risk. Don't lower your frequency. I'm not saying any of that. The one thing that you can actively change is your position sizing. And the only reason I think you should look at changing your position sizing is because you have such a high value at risk that with, we only offer small leverage of 30 to 1 on FX pairs. And I think gold, it's 10 to 1 or 5 to 1. I can't remember off the top of my head. That, if you're trading with large position sizes, there is a chance you're either going to get margin called, run out of free margin, or, blow up the account. And that's good for nobody, right? So I would say bring your position size down, because again, your Darwin is going to come out to the same result eventually, because regardless of whether you're trading a 10 lot or a 1 lot, your Darwin is going to be calculating the exposure and it's going to be adjusting it. So if you're trading a 10 lot, the Darwin will be, might be trading a 5 lot. If you're trading a 1 lot, the Darwin might go, actually, you're too low a risk now, so I'm going to scale you up to a 5 lot, but it comes out the same result in both instances. So Timmy said, I was told that initially I lowered my lot size, but I wasn't seeing any significant add up on DarwinIA. I mean, I don't think, it doesn't look like you lowered your lot size because your value at risk never had a dip. What I would say to you is you don't have to be concerned about this right now. Like, there's nothing to be concerned about, but I would spend the next 3 months slowly lowering your position size. So again, I don't know the position size you're taking now, but let's say it's 5 lots per trade. I would go, my target in 3 months is to have cut that by 5. So I want it, instead of trading a 5 lot, I want to trade a 1 lot. I would slowly lower that over time. So every week or so, drop 0.5 of a lot or 0.25 and just keep slowly lowering that down. What will happen there is your value at risk will begin to slow down. It will begin to drop, and then your risk multiplier will begin to increase. So the gains that you're seeing on your Signal account will start to be more reflective on your Darwin, but still you're going to be making less gains. So it's still going to come to the same result anyway. The only thing is, like I say, you're in the region now where I'll be like, you're kind of in the danger zone. I would like to see your value at risk come down, because it's clear you have an edge. You've got a positive expectancy over the past 4 months. Just try and tune that risk down. Whilst Timmy types back, we got a question from Jeremy. I have a question. Once we become a Darwin Silver, for example, from Darwin Zero, we're like a signal provider, right? What type of company should we open to make invoice? Okay, great question. So yes, you are a signal provider, which is basically like a contractor. So as far as type of company you should open to create an invoice, that doesn't really matter. That you can invoice however you want. If you want to be paid to a corporate account, that's absolutely fine. You can invoice us from a corporate account, or you can get paid to your personal bank account. It makes no difference. It would literally just be like being a contractor for marketing or whatever, cleaning, whatever you want to do. So there's not a specific type of company that you need to create. Rob said, I'm going slower on the one account. Should I go from, say, 2 lots to 2, then to 1.7, then back to 2, and on or off, stick with 1? I'm going slower on the one account. Should I go from, say, 2 lots, then 1.7, then go back to 2, on and off, or stick? I would say just stay as consistent. With 2 lots, as long as your value at risk isn't high, I'd just stick at 2. If you needed to bring it down, then yes, slowly bring it down. I wouldn't start flickering back and forth, going to 1.7 to 1. Like, I wouldn't bother doing that. If you're gonna commit to lowering your VAR, then do it slowly over a good period of time. But like I say, if your VAR is not high, I wouldn't be worried. Okay, so Timmy, I did answer that question about DarwinIA. I did say it doesn't look like you lowered your lot size because your value at risk has only been increasing. So I'm not sure when you was told that or when you tried to lower your lot size, but to me, it doesn't look like you did lower any lot size, although I could be wrong on that. And any gains or loss you will also see on your DarwinIA, but it's all based on your risk multiplier. So if your risk multiplier is X, it's going to be different to that. Pleasure, Jeremy. And then Timmy also asked my second question. I don't have the required banks for withdrawals, but can I withdraw through the USD card I pay subscription with? That would be a question for our support team. I don't deal with payments, accounts, any of that sort of stuff. So apologies, I can't be more help with that. But I would send an email to this info@DarwinXZero.com. And I would ask them for the most appropriate way to go about withdrawals and stuff, because like I say, I tend to try and stay as far away from that as possible, because I then become support and it becomes really difficult for me because I don't have access, and it's a lot of back and forth between me and the guys. Jeremy asked, do you have guys from Andorra? Because I don't know actually if I need a company or not. Not that I'm aware. I mean, I don't know. We probably do. But I genuinely couldn't tell you. I would potentially speak to an accountant, just ask an accountant and ask what you need. From our end, you don't need to be a corporate entity, but it's completely down to like how you want things set up on your end and how you want to receive payments and stuff like that. Before we finish up, guys, if you do have any questions, just pop them in the chat. And before we finish, I'll go over them. Okay, so Timmy said I have a trading community where I get referrals for Darwinex Zero. Okay, yeah, I think we've spoken about that in the past, haven't we? In DMs. Still got a few credits left for a couple of months subscription. How do I join proper partnerships? Send me a direct message on Discord, dude. Send me a message and we can have a chat. I think we've spoken before on Discord, so if you message me, it should just come straight through. Jeremy, it's my pleasure, dude. If you need anything else, just let me know. Like I say, I have very limited access and jurisdiction over payments and accounts and all that sort of stuff, but I'm always happy to help in any way, shape or form that I can. So if you need anything, just please feel free to, again, direct message me. Discord is always the best way to get in touch. It's a place where I basically live on Discord. So I can see the Rango's typing. How we doing, dude? How's things your end? I was looking at your Darwin a few days ago, actually. Where is it? Rango. Rango. I don't know what you're doing off the top of my head. Great point, dude. Great point. So the Rango said, the Spanish channel is inviting people with their Darwin Silver or Gold, I think, to have just a little chat during an hour. What about doing it in English? That's exactly on the cards. That's something that I'm looking to implement over the next few weeks. I've got kind of a checklist of things that I want to implement for the Discord and marketing. So I'm kind of going through them bits by bits. The initial one was to get the performance coaching sessions with Sanjeev. We did our first one on Monday, yesterday, which is great. I want to start doing interviews, proper interviews with like I used to do on the YouTube channel, but also want to get more active discussions. I've been waiting for approval for an idea that I had a while back, which ties in nicely. I want to start doing live trading sessions. So, you know, whilst the market's opening, for example, jump on and anybody who's in the session can join, and bringing a guest onto the stage to go through markets, go through what they're looking at and make it into kind of a proper little trading community. So I love the idea. We're working on it, and it will be coming hopefully in the next few months. I'm gonna butcher your name, so I do apologize. Menelaus. They said, what about risk percentage? So if you have a 20 pip stop loss and, for example, 1% risk, and if you have a 40 pip stop loss and 1% risk, then your lot size is cut in half, but the risk percentage remains the same, but lot size is half. That way, lot size can vary. That's absolutely fine. It's the same like risk per trade. It's not gonna hinder you by changing your lot size per position, because it's not gonna go, oh, this guy's all of a sudden dropped from 4.2 lots to 3.8, so we're going to cut it. It's still going to mirror it over. It's when there's like significant spikes. If you went from trading 100 lot to a 1 lot, then yeah, there might be a bit of an issue. But what you're explaining there is what I do, and my risk multiplier stays pretty consistent. Again, I'll bring it up if you want. So I trade multiple assets with varying size stops, varying size lot size. And this is my risk multiplier. So put it all the time. So see my risk multiplier 1.41. It stayed as that for ages while I was in calibration phase. Then 1.29, but it stayed pretty consistent. So it changes on a trade by trade basis because every single trade has a different value of risk built into it based on the asset that you're trading, how long you hold it for, etc., etc. I've kind of gone down the rabbit hole recently. I've been recording a load of short form content, which I'm going to bring to you guys soon. Again, Rango, one of the things that I've been working on, which has kind of taken priority. And I've gone down the rabbit hole of really getting into exposure, deleverage, value of risk, and trying to understand it. And the calculations that go on in the background are wild. Believe me, it blows my mind. But yeah, don't worry about changing your lot size. You haven't got to trade with a fixed lot size. Again, even if you traded a 10 lot on a euro dollar position and a 10 lot on, I don't know, a pound yen position, they both have different risk profiles anyway. So it's never going to be exact on a trade by trade basis. We understand that. The risk engine understands that. It's about managing the exposure so that if you go from trading on one lot to then adding 5 million lots in, the risk engine is going to be like, whoa, we can't do that. Now let's keep it, keep it under control. Charlie's pinging off loads of alerts. What on earth is going on? Is something moving? A euro dollar's tanking. But Rob asked if you're thinking number of risks, you can do that too. Risking today 1,000 per trade, but it can work for the same for the risk engine. Can you explain this? Yeah, give me 2 seconds. My dog's barking. I might get her vocal cords removed because she keeps disturbing these sessions. Yeah, FX Tyrant. So this month, a lot of traders probably had their Darwin risk multiplier adjusted lower due to volatility. Can the risk multiplier slowly improve over time? Fantastic question. Yes, that is a thing. If you're trading an asset that's now got a higher average true range, for example, then yes, that means there's a higher volatility inherent in that asset, and therefore you do have a greater risk exposure. I would hope that for the majority of traders in here, you've been kind of adjusting your stop sizes and your risk anyway, because the past few months, I mean, I've seen a few traders who really benefited from the high volatility, but as far as like the general consensus, a lot of traders have been struggling. And the guys who are surviving are the ones who've kind of adjusted their size. So yes, the risk multiplier will probably decrease slightly, not massively, but slightly, but I would presume guys are reducing their risk anyway. And yes, the risk multiplier goes hand in hand with your value at risk. So if your value at risk increases, your risk multiplier will decrease, and vice versa. If your value at risk decreases, your risk multiplier will shoot up, and it will improve over time. It's kind of a living, breathing, organic calculation, right? So every behavior, every trade, every decision that you make feeds into that calculation at any given time. So if you're making different decisions on a, moving forward, it is going to adjust slightly. It gives slight recency bias. So what it does is it takes the previous 45 days and then measures it against a 6-month period. This is what I've found out as I've gone down the rabbit hole of value at risk. It takes your recent 45 days, takes a look at your average value at risk, compares it to a 6-month period, make sure you're not being over or under leveraged. And then that's how it works out your risk multiplier. But again, it's organic. Every decision that you make changes that, and it will go up and down. But as long as it's like pretty consistent, you shouldn't see any big swings. So it's nothing to worry about. Jeremy's asked also, once performance fees have been made, or once performance has been made, if performance fees automatically sent to Darwinex wallet, or can it stay on the account helping grow in the account on Darwinex Zero? I actually don't know the answer to that. I think only because every trader I've ever spoke to withdraws their performance fees. So you can go in and you can either send it to your Darwinex wallet or withdraw it, but it won't help grow your account because it's sat in at Darwin level. The performance fees are withdrawn from the allocation. So it's kind of not like, oh, we can leave $5,000 in there and come back to it later as a buffer. It's automatically deducted because Darwinex has to take their cut and the management fee, etc., and therefore your fee is put aside. So I wouldn't ever leave it in. If you're going to leave it in the platform, either put it for, for a permanent allocation or pay for another month, like use it for credits for subscription. But I wouldn't just leave it in the account. FX Tyrant asked, on Darwinex Zero trading on the MT5 platform, does Darwinex set any limit of max outstanding trades? Some MT4 demo accounts have it limited to 100 simultaneous trades ongoing. I don't know the answer to that. That's something that if you need the answer to that, send me a direct message and I'll find out for you. I know MT4 does because we've had issues in the past with some guys trading EAs where their EAs have peppered and then they've hit a limit. MT5, I'm not 100% sure. I don't think there is, but like I said, I don't want to give you the wrong answer. So if it's important, if you feel like that's going to hinder you, just let me know and I'll get you the exact answer. Jeremy asked, I see, is it more for the Darwinex Classic then? I mean, the performance fees are the same for both. In Darwinex Classic, obviously, you would keep the account growth that you make. So, because it's your own capital, if you make 10% on 10 grand, you've made $1,000. So you would keep that, of course. But in terms of performance fees from investors, let's say an investor put $1 million in and you made 10% and it was 100 grand and you keep, your 15% of that, that wouldn't be left in. It would be deducted from the amount. So it would be taken, the new high watermark would be set, and that 15% performance fees would sit waiting for you to do something with it. And then Rango asked, exactly because Class is a live account with your own money, so you can deposit what you gain. With Zero, you're just acting as a signal provider with your signal account. Yeah, of course. But at the same time, I don't recommend leaving money in there. Like, the whole point here is to get paid, right? Like, whether short-term or long-term, like, there's no point leaving the money in there. So I would withdraw it or, reinvest it into the platform for permanent allocations or subscription payments and stuff. Menelaus, apologies if I butchered the name again, asked, do most traders on Darwin risk 0.1 to 0.2 or very low risk percentage? Most Darwin traders I see has returned very low compared to most regular trading done on personal and prop accounts. Most people tend to risk 0.3 to 1% per trade, but on Darwin the percentage return is many X smaller, or did Darwin downplay the percentage return compared to what was made on the actual account? Okay, there's a couple of different points and a couple of different questions in there. So let me cover them kind of like singular. So not every trader has a low return. Okay, not every trader has a low return. There are lots of traders who do have low returns. There are equally lots of traders who have high returns. Now, as Rango said, he usually blow up in props. Prop trading or funding company trading is not real trading. It's as soon as you implement limits, as in 10% drawdown limits, 5% daily drawdown limits, performance targets, whatever it may be, as soon as you introduce, what's the word? Synthetic limits like that, you take the whole trading element out of it, okay? Because you've got 100,000, but you've only got 10% max drawdown. Now that makes you think of that 10% drawdown, that's 100% of your account, right? That's not real trading. You know that if you lose 10%, you lose the account. When these guys come onto DarwinX, a lot of the people who've made money on props can't make money on DarwinX or can't build a record. And we did go over this the other day, and the guys loved it because I gave an actual example, which I'm going to do now. Let me bring my Epic pen back up. So let's say somebody on prop firm, and this isn't me bashing prop firms, by the way, because I actively use them. I'm funded. I've used prop firms for over 4 years in May. I got my first FTMO account. You know, and I think they're fantastic for people who can actually trade, or people who've figured out a way to gain the system. But let's say we buy 10 accounts and they're all 100K, right? Now this is all rough, and I know there's contingencies that I'm not accounting for here, but just hear me out. This is 1 million in funded accounts, right? So you're starting at a balance of 1 million, which is here on this chart. Now, let's say you blow 8 of those accounts, right? Now your new balance is, well, what would that be? 80 grand down. So your new balance is $920,000. Okay. Now then let's say you pass 2 accounts, which would be 30% up, which would be here, which now would be 950, because you'd have made 10, 20, 50. This is using FTMO as an estimate, but you'd have made 30K from the challenges or the phase 1s and phase 2s. So your actual simulated equity curve would now be sat at 950K. Now you could go and make, let's say this cost, for argument's sake, 10 grand as an investment into those accounts. Now this trader could go and do a 20 grand payout, right? Their new equity curve at this point, or their new simulated equity, would be 970K, right? They hit 8 max drawdowns, which would be 80K, or 10 times 10K, which is, sorry, 8 times 10K, which is 80K, which means their new balance is 920. They then pass 2 phase 1s and phase 2s, which means they've made 30K on 100K accounts, right? So their new balance is 950. They then make a 20 grand payout. The trader is now up, 20K payout, covers the 10 grand, they're now up by 10 grand. Trader's profitable, great. Their simulated equity curve is still down. So even though they've made money, their simulated equity curve, which is their true P&L, is still down. Like, I can't, the amount of times I've tried to explain this to people and they still don't understand. And then I can't show people's Darwins because obviously that's the data protection. But I see a lot of prop traders who come and they try and implement the way they trade and the way this, and you just see their account bleed because they actually can't trade. Now, what they have done, and I'm very jealous of, is they've figured out ways to smash up a prop firm and take 20, 30, 40 grand payouts. Like, fair play. That's a great business model in my opinion, but it's not true trading. So all of that was kind of a long-winded explanation to tell you that you cannot compare a return on DarwinX to a return on a prop account, because DarwinX is reflective of personal trading or trading with personal account or with a professional account, you know, whether you're trading for a prop desk, hedge fund, investment bank, whoever the professional entity may be, but it's not reflective of prop trading. Prop trading is more akin for most to gambling. As much as people hate me when I say it, I think all trading is gambling, but prop firms become extreme gambling. Whereas Darwinex, like I say, is more reflective of the professional side of things. Even personal accounts, people tend to be more reckless when it's their own capital. You know, so somebody's happy to put a couple of grand into a personal account and then stick it on 1,000 to 1 leverage and just go ham and just try and trade it like a madman or a mad woman. You know, and they are very, very aggressive. Again, more akin to gambling. And then when people try and come and do it on Darwinex, their value at risk is really high because they're operating at too high of a risk level because they're doing what they would do on prop firms or on their personal accounts. And, you know, it's proofs in the pudding, right? Can you outperform the S&P operating at the same risk level? A lot of people can't, but there are certain people who can. Those people are the ones who are going to get allocations, the ones who are going to get investors, and the ones who will get capital through Darwinex Labs. And if you're not that person, well then fine, stick around, learn more about your trading, use Darwinex Zero to use all the tools that we have and all the advantages that you have of having a Darwinex Zero subscription and build that up. There's nothing saying that if you're not a successful trader right now, there's nothing saying that in 2 years you can't be, but it's going to take focus. It's going to take being around the right people, following the right people, being in a Discord like Darwinex where you've actually got people focused on the same things and not just somebody flashing a 10 grand payout saying, I'll show you my one strategy with an 80% strike rate that'll show you how to get this payout. Like, cut the BS and stick to, I feel like I've gone off on a really, really big tangent here, so I'm going to rein it back in. But again, it all feeds into my final point, which is your final question. Do Darwin downplay the percentage return compared to what was made on the actual account? I'm not sure if you was here for the whole presentation, but it's an organic metric. So if your value at risk is high, your risk multiplier would be lower. If your value at risk is lower than 6.5, your risk multiplier is going to be positive, and therefore your risk is going to be scaled up. So it completely depends on your risk exposure as a trader, but it can be higher or lower than your Signal account or MetaTrader account. Jeremy asked, last question, on the permanent allocation, is it the same? Is it the same aim is to withdraw once performance fees have been made, not really make it grow to 200k and so on in order then to have better withdrawal? Yeah, just withdraw it as you go. Like, it's already withdrawn for you. It's not gonna stay in there. Like, it's already set aside as your performance fees. So just take it out, dude. Take it out, treat yourself, do something cool with it. Menelaus has asked a follow-up question. Does it work to copy trade to Darwin account? Yes, absolutely. You can trade. You can put it on a trade copy. That's absolutely fine. I use Traders Connect. So I actually use FTMO as my main account. I've got an FTMO Live. I use that as my master account with Traders Connect, just because I prefer CTrader over MetaTrader. And then I copy that through Traders Connect to MetaTrader, which is my Darwin account and a couple of others. So I can trade my own personal account and prop accounts. Yeah. And then I copy the trade to the Darwin account and adjust the risk accordingly to the Darwin account. So I can keep on trading and just build a track record on Darwin over copy trading whilst I trade normal on my other accounts. Absolutely. Absolutely. So what I would do is, if you're trading with, I mean, I don't know. Copy your risk over, maybe slightly lower it down. Like, there's no negative to lowering your risk at Darwin level, because again, it's not going to affect the end result from your Darwin, because it's going to find out the inherent risk and it's going to come to the same result anyway. So whether you're trading a 0.5 lot, 1 lot, 5, 10, 100 lots, your Darwin will always come to the same result. So just try and keep it as low as possible, and just trade as well as you can. Your only job is to take the best trades. All of the risk and that sort of thing is managed at Darwin level or risk engine level. So don't worry about that. And see, we've got a couple more questions coming in, and then we'll tie up the session there. Okay, so Timmy asked, what's Darwinex's view about expert advisors? I mean, neutral. We've got some really successful EA traders. The only thing I would say is, This is SYO. He's our second most allocated trader on Darwinex, currently managing just under 10 million. This guy codes his own EAs. He's got a few different Darwins. And yeah, so I would say we're pretty EA friendly. The only thing I would say, don't just buy an EA off MQL marketplace, stick it on a Darwin and think that you've cracked the code. Generally, if you can buy an EA online, it's not that good, or the provider of that EA just generally doesn't really give a monkeys about it. Is what I found. There's nobody manage it. I would always try and make sure that your EA is managed by you, even if it's just the parameters, so you can set custom parameters. The other issue that you come into with EAs is that if loads of people have it, if it's easily available online, you might come into correlation issues with other Darwins, basically meaning you're taking all the same trades and the same risk, and therefore we would only back one of the traders. Durango said, yeah, trade with EAs, no worries, did them myself, absolutely like banging. Yeah, I would just say, don't just buy an EA online, think it's gonna crack the code. But as far as expert advisors go, we have no issue. Trade how you want. Menelaus asked, I use the Trade Assistant EA on MT5, so I just use a fixed percentage risk. That's fine. So stop loss could be big or small, and the lot size is adjusted to 0.3% risk. So lot size will vary, but risk is always the same. From what I understood, that is not a problem. He talked about lot size being big, small. I don't think. Yeah, absolutely no problem, dude. It's all about your risk exposure. Lot size is kind of irrelevant in the grand scheme of things, but it's not, because it works your risk exposure. But don't worry about that because there's other factors that go into it, and you'll soon figure it out. But believe me, it's not an issue. Timmy said, yes, I manage my EA, it's very profitable. Then yeah, absolutely no problem. Like, if you trade with an EA, absolutely fine. If it's profitable, we want to know about it, basically. So if it is, use that, is all I'll say. And then we're going to wrap up the session here, guys. So it's been a good one. These welcome sessions usually last for 30 minutes. So we've pretty much doubled the session time, but it's all because you guys have been asking questions, which is what we're here for. That's why I enjoy doing these sessions. It's so much easier than if I'm sat here talking to myself, because I do the presentation and I clock off. So thank you all for coming on, watching and asking questions. I really appreciate it. We'll be back tomorrow with a strategy development session at 5 p.m. Let me double check, so I can give you the right time. 4 p.m. UK time, so an hour earlier than what the session was today. We'll be doing a strategy development session, so feel free to come along, bring your Darwin. If you're in the audience, I pick on somebody to use their Darwin as a live example. We go through the statistics and understand how we can improve from a statistical standpoint. I used to be a data analyst, so I'm not just some random guy on the internet talking about something I don't understand. I've been a trader for 6 years and I was a data analyst before that, so that's kind of my jam. That's what I love to do, is kind of finding patterns in people's behavior and in data sets. So that's a fantastic session. So guys, if you can make it tomorrow, that would be absolutely fantastic. But if you can't, thank you all for attending, and I will catch you in the next one. Have a fantastic evening, and I'll see you all later.